we are joined by the management of Symphony. We have Nurpesh Shah, Executive Director, joining in with us as well this morning. And thank you so much, Mr. Shah, for joining in with us. And obviously, Mr. Shah, when we're looking at your numbers, Q1 obviously would have been an impact coming in because of the unseasonal rain that impacted the peak season that comes in for the company. Now, could you just tell us what is the early indications that have picked up in the terms of demand trends that you're seeing in Q2? It's off season, but what are the signs that are indicating right now?
Thank you. First and foremost, to give some highlights of our Q1 performance, even though despite unseasonal rain and overall industry degrew, entire cooling industry degrew, we have increased our market share as on 30th June. That's number one. Number two, despite YoY degrowth, our June quarter sales has been second best June quarter top line sales, higher than any of the June quarter sales pre-COVID summer. Number three, as we have also now ventured into several path-breaking innovative products, including products which sell round the year like surround and duet, etc. That is adjacent category. Apart from LSV, they do sell round the year. And finally, our off-season collection up till yesterday is marginally lower than last year. So first quarter performance is no way the indication of, on a standalone basis, the full year performance. We do expect decent YoY growth in top line as well as profitability.
Right, Mr. Shah. Obviously, you're expecting a decent growth in top line and profitability going forward in the whole year as well. You've highlighted some off-season products of yours as well. But, Mr. Shah, also I want to understand in terms of anything on the inventory levels that you are seeing. What is it that we could expect in terms of inventories? Is there a build-up in terms of inventories due to this weak demand sentiment that was there in Q1? And how is the channel behavior actually shaping up given this inventory? And okay, if you could tell me that first.
As far as inventory at a company level is concerned, or as far as our OEMs are concerned, it is absolutely normal. Having said that, coming to the channel inventory, obviously, with some of the distributors, especially in some parts of northern India, as well as in central India, they do have some high inventory. In most other parts, inventory is almost normal.
Where should one see margins shape up given all of this environment and everything that's happening? Where should margins for FY24 be at?
Margin for FY24 on a standalone basis as well as on a console basis, it should be in line with or better than what we registered in 22-23. As I said, Q1 is not the reflection of entire year performance, whether on a standalone basis or at a subsidiary level. As you would have noticed in subsidiaries, margin and performance have been far, far superior. Neither that is the reflection of the full year, and so is Symphony India. So certainly the way in which we have strategized in terms of the product, value engineering, many aspects, top line wise as well as profitability wise, including EBITDA margin percentage, should be superior to what it was in 22-23.
Understood. But, essentially the question will be how much superior, right? If it's going to be largely just a 0.5% here or there, or whether we can see or whether there is scope to see a larger margin expansion in FY24.
We believe that there is a scope of the larger margin expansion. How much? I'm not in a position to quantify or specify that.
Okay, Mr. Shah, thank you so much, for joining in with us this morning on ET Now and giving us an understanding on what we should be expecting from the company going forward as well. Thank you so much. But that was the management of Symphony for you all. Not much of a worry. Q1 does not indicate in terms of the whole year how we should be expecting the growth for the company.